Well, crypto crypto is crashing again. The charts, absolute red. X is in a meltdown. Maybe even in this live stream, you might see some meltdowns, some temper tantrums. Everyone is definitely screaming bear market. I shouldn't say everyone. Actually, we're going to look at a lot of people that aren't screaming bear market. And, you know, I hesitate to say it because in these moments it's unpopular, but I'm bullish. And I'm actually more bullish than I've been in months now that we're having a nice consolidation move at this part of the business cycle and everything else is going on right now. These are the things I want to discuss during this dip. I hope you all are doing well. I really do. I know it's not fun. I don't enjoy dips either, but I want to track the move with you. I don't do live streams that much anymore, but when we're getting these really big dips, I want to be here for it. And I like to do live streams during these moments because, you know, I think it's, as a content creator, it's something that I just want to do. I want to start this. Hit the subscribe and like on the way in, by the way. If you're not a subscriber, I appreciate it. If you're not in our intelligence system with our risk models, our exit planners, we have a free trial. Click the link below, get set up. If you're a macro investor, if you're taking this game seriously, go try it out and start strategizing your moves. In a few weeks, and I 100% agree with this post. In a few weeks, nobody will even remember the price action today. All news, all assets headed higher. We're going to look at the technicals. I'm going to look at charts because I'm not just going to sit here and be like, you know, everybody, I'm bullish. We're bullish. I want to back it up by data. Here's another post. And I'm going to be going through some posts, you know, just that I've come across. I think sentiment is really important right now. I find it so interesting, the contrast that I'm seeing in the comments. You know, somebody like Leonidas, he's been in the space for so long. He's the creator of Dog, the meme coin that I'm a very big fan of on Bitcoin. But the people that have been in this space for so long, these are the people that are just, they're cool, calm, and collected right now. And there's no panic. They're seeing a bigger picture. But I just posted earlier kind of about these comments that I received immediately after posting my video. And he said, imagine being bearish on crypto right now. This is the most beautiful setup of all time. Bitcoin is $100,000 and people are scared. The next time to be scared, or I'm sorry, the time to be scared is when Bitcoin is $100,000 and everyone is super excited. And it wasn't that long ago that was the case, everybody. Very few understand this. 100% agree with that. If you even go look at the Bitcoin chart, like not even just in context to bull market highs. Like you can sit here and be like, man, the time to be scared is here. And by the way, nobody is scared there. The fear, the negative comments, the sentiment is not like what we're seeing now in these moments. It's just not. They're nowhere to be seen. And I think what we're trying to think about here though is when we're here even, the same is true. The same is true. The time to be scared is when Bitcoin is 100K and everyone is super excited. This is shaping up to be the fourth best buying opportunity of this entire cycle. My short-term risk score is compressing across. So I want to look at this and then I want to look at this post and then we'll look at a little bit of charts. But my short-term risk score is compressing across every major dimension. So first off, let me point out what he's saying. This is shaping up to be the fourth best buying opportunity of this entire cycle. So this person's bullish. Fourth best of the cycle. And by the way, we've been here before. This is a Bitcoin chart, right? Right here, big dip, right here, big dip, right here, big dip, right here, big dip. One thing that I want to say right now as I'm doing this video is the one thing that is kind of different too in terms of these dips is if you look at the business cycle and you look at Fed monetary policy right now, consider this. Quantitative tightening ending December 1st. It just got announced. Here is July announcement, quantitative tightening coming to an end in 2019. Okay? And it came to an end in September 2019, right here. You can see that on the Fed balance sheet. What followed? If we go to a Bitcoin chart, going back to 2019, so there's September 2019, quantitative tightening ending. Was this the beginning of a bear market? That's a question. No. Was it the exact moment that the bull market took off? No. But it was absolutely the end of quantitative tightening, September 2019. This is the moment that we're going into right now. I think that is something that I don't see anybody really paying attention to. And I'm glancing at the comments. I told my wife, I was like, I'm going live. I want to, but I don't want to, I told her. Because it's just like these comments come out of nowhere, and it's just loaded. Don't know if they're bots. I don't know what they are. People don't know. People don't understand what's going to happen. Here's one. Dan has been wrong 4+ years. So I have a question, and I don't want to get all defensive here, but I get this comment all the time, and it's just like, all I do is I sit here since 2018 presenting data to you, and same type of thing back here, the bear market lows of 2018, right here, the bear market lows of 2022. With this chart for the last 4 years, please explain. And I don't want to sit here and be like, I'm never wrong, I'm right all the time. But please explain what's been wrong. Total crypto market cap chart, altcoins. So excluding Bitcoin, let's talk about altcoins. From bear market lows, other than you didn't get a 10, 15, 20, 50x, 1000x gains, please tell me what has been wrong since the bear market lows. It's crazy. It's crazy. Back to my point. You can count how many times we've been here. You can also count how many times people have told you to sell at lows. Same chart, different days, same comments, different days. I've been doing this for, literally in December, I'm going to be able to say for 8 years. And it really is the same thing every time, everybody. I've tracked bear markets. I've tracked bull markets. I've tracked bull market dips. It's the same thing every time. This cycle even, it's been the same thing. Every dip, the people that come out, just nasty comments. And I'm trying to contrast something here for you, because I know there's a silent amount of people that are watching, but the thing I'm trying to contrast is, you look at the comments and the sentiment online, it's very easy to get distracted or swayed in a certain direction. But you look at the OGs, you look at the people that are legit in this space, like heavily invested in the space, committed to the space, have been in the space for a while. What if, this is the CEO of Bitwise, what if, because everyone worries about a bear market in 2026 as part of a 4-year cycle, the expectation pulled forward timing of the bear market? And we've actually been in the bear market for much of this year. Not sure, but crazier things have happened. The market is changing. So I want to take that post and I want to look at a chart, but I want to pair it up with this post that I saw too. Rip the Band-Aid off, because this is like a combination of sentiment, but also a very interesting 2022 point. Rip the Band-Aid off. Bring us to where we need to be to see if there's strength at all or if it's truly over. Much better this way. Can't wait to buy altcoins again in the bear. In 2022, nearly everyone was saying it was truly over and this asset class was going to die, but things change fast. The thing that popped up, like the thing that stood out to me reading this post was, he's comparing where we are right now to this, because this is precisely what the sentiment is right now. In 2022, nearly everyone was saying it was truly over. And I do remember, if you go to, go to any chart, but basically back here, if you remember, I think this was FTX collapsing. Everybody was having the same sentiment, like kind of like we have literally today with this move. And here's the fact. It wasn't over here. It was actually the bottom. So Hunter is also saying, what if we've been in a bear market this whole time? And it's so interesting, because if you go to the altcoin market cap chart, this is everything excluding Bitcoin, and you just look at this chart, we've absolutely not, it's not been in a bull market, I can tell you that much, and that you can be argued for even Bitcoin. And in this state of years of quantitative tightening, liquidity being just extracted out of the market, it's so impressive to see actually how altcoins even have actually held up and operated in terms of price action, especially I think, pretty incredible to see what Bitcoin has done in years of quantitative tightening. Now that pressure is about to alleviate. And I think liquidity, even if it's just the quantitative tightening coming to an end, I'm not saying quantitative easing. I'm not talking at all about that. But I'm talking about quantitative tightening coming to an end, liquidity and the loosening up of liquidity. And I'm not saying this is going to happen tomorrow or even the first week of December when quantitative tightening ends, but the loosening up of liquidity is likely going to front run the belief that, okay, maybe we should be bullish right now. And I think that's what's going to happen right now. And I don't know how long it will last. We'll watch short-term price action, but the sentiment is absolutely just like it is every time we dip. It's just full of bears. It's full of people putting just laughy emojis. We're so going into a bear market. No analysis, nothing to back it up. Just people that are just upset that they've not gotten a 1000x. And so you focus on the fundamentals, you focus on what the Fed is doing and the business cycle, and we have a whole different look. And that is to say, if we're anywhere, if we want to take the chart and look at like, where are we? It's so similar to back here. When in July 31st, 2019, back here, the Fed announced the end of quantitative tightening, and it came to an end in September. There was still some more pain on the charts, as you can see, mix in there just COVID, right? Which really helped the money printers come on. But this was the beginning of a new era, a new phase of liquidity for cycles, and you see what it did to a risk on asset class like crypto. Thank you. It only took like the first 10 minutes of the video, but I found some love in the comments, everybody. Gives me the chills. Dan, love your content. I appreciate you. I'm way too sensitive with the comments. I know I know it's annoying that I even like bring up the hate comments so much, but think about this for a second. Like even if we go lower, and you can take this chart, and we've been talking about this, by the way. We're going to look at Solana, Ethereum, Cardano. I want to look at charts, but like we've been talking about these pullbacks. And in particular on the total market cap chart, this 200-week moving average, though we don't want to hit it, has been in play. This is what we just hit it. I feel like this just feels like it was yesterday, and it wasn't. This was all the way back in April. But if you remember the tariff fear, it was game over. It was game over for markets. We hit the 200-week moving average back here in 2024. We hit the 200-week moving average, and right now we're capitulating. Right now, I don't know if we're going to get there, but we can monitor. It's been rejection for the structured move for altcoins. Everybody's frustrated. I get it. I'm frustrated. You can ask my wife. It's so annoying. Like it really is annoying. I 100% agree with that, but it is what it is. It's structure. And somebody messaged me on X and they were saying something. I forget exactly what they said, but it was something along the lines of like, this almost had to happen like this. It just almost did. And I don't know if you've been watching these markets, but like even last year when we were getting this pump, I remember it breaking out in November and being like, man, this is too easy. If we're about to go into the parabolic bull run, this was too easy, like clockwork. What in the world? But even so, we were getting a really nice move. All the pro crypto narratives. We were still in the quantitative tightening phase, right? And then what happened? Boom, absolute rejection. And this is the moment where things really started to change. And we really started getting data and evaluating things like liquidity, things like what the Fed is doing, and things like what are market makers and exchanges doing. And it's just been nonstop. Whenever there's just insane leveraged longs, they're getting liquidated. It's rinse and repeat. It's been that way. Even right now, this is what is happening here. And it's crazy just to kind of see how these markets are operating in that regard. But back to the point, this almost had to happen this way. And it's just because they need retail. And I did a video on this earlier. They need retail to get shaken out. They just do. Everybody. Besides quantitative tightening coming to an end, we're about to get the Clarity Act. We're in such a high fear environment. And we also have just a massive amount of altcoin ETFs that right now are being held up by the shutdown. And the shutdown is another piece of this mess that's happening right now. But with that being said, you know, big money, and you're starting to see it even, I think, as of today, big money's going to accumulate these dips, everybody. While the anonymous comments that you see in the chat here of people just calling me names and complaining, they're getting shaken out. Maybe they're just venting and they're actually not getting shaken out. I don't know what's happening, but there's a massive redistribution happening, and it's been happening, I would say, for like the last year. And it is what it is. But if you're a macro investor and if you're a value investor like I am, I'm 100% locked in on the crypto space. I just am. I also wanted to, well, I read this earlier, but this is what I was just talking about. Binance pushes ETH down. Wintermute absorbs the liquidity off exchange. The goal is simple: make retail sell the bottom. That's what we were just talking about. So I want to take a glance at some things. If I scroll down, I have my dashboard open in our CCV intelligence system. But all this green, these are risk scores dropping. Bitcoin, this is a big drop, like quite quickly. Bitcoin down almost 5 points in terms of risk. We go to our risk models. This is what Ethereum looks like. I don't know what it was. Was Ethereum on here at all? There's ETH down 3 points. Ethereum down 3 points. You go to the Ethereum risk model. It's at a moderate buy right now in terms of risk. But if you look at just previous cycles, you get a sense of when it's sitting at a 34. Historically, at the risk of 34, the price was higher 50% of the time after 3 months and 87% of the time after a year. So that's some compelling data right there. Look at Bitcoin. At the risk level of 37, the price was higher 74% of the time after 3 months and 90% of the time after 1 year. So I don't know. There's no guarantees. The risk models that we have here are proprietary. They consist of a lot of data, but they're not to be predictive. They're to offer you insights based on all of the data that we have here and how these markets move for all of these assets. What's the risk? And for me, that's everything in determining buying and exiting. And that's exactly what the purpose of these risk models are for. But look at these numbers now, 37. And you can open up all of our assets and you can categorize it by like the lowest and just look at this. We've got, an altcoin like Optimism sitting at a 6, Polygon's at a 12, Dogecoin is at a 16, everybody. These are worthwhile data points to consider when you're starting to say the bull market's over, we're entering a bear market, because these risk levels, these aren't bull market high risk levels. And pretty previously, not that long ago, they were kind of pre-bull market risk levels. But I was joking with the guys, like, we should have built the accumulation planner before the exit planner. We launched in May. I think we were anticipating, as pretty much of the industry has been, that we're going to get a bull market as kind of the next phase of the cycle. And it's a good idea to start planning your exit. So we have the exit planner back here, right? You can start planning your exits based on risk. You can plan it based on price. And I was just joking with the guys, Alessandro, I was like, we should have been planning, accumulation planner, because right now these risk scores and the crypto market is falling to levels that are probably good for accumulation. And I'm not sitting here saying go buy, but when I'm studying these charts, we're falling to levels for a coin like Dogecoin that is historically a good place to start accumulating. So let's look at some charts. I want to start, I wanted to kind of start on this chart. This is a total crypto market cap chart. Yes, this is everything. So I talked about that. I talked about this chart in this morning's video. We just have these higher lows. So you see this theme of higher lows across risk models, like the risk models we were just looking at. You see it across different charts, like a Bitcoin chart. You even see it across something like an Ethereum chart from the bear market lows, higher lows, just, big dips, capitulations. You can go to an ADA chart, higher lows from the bear market lows. It's just this theme. Some look worse than others, some look better than others. But you go to the total crypto market cap chart, everything, and we just have this range down here that we've fallen into twice before, once in 2024 and then once in April 2025. It's a higher low Fibonacci. I will be monitoring this over the next like week or two. I'm kind of just curious. You know, I won't sit here on this live stream and be like, man, we're about to bottom. We're about to, I just saw Marty Party actually though. He was posting, I don't have the post up, but it looks like all longs have been liquidated. There's like no longs left to be liquidated right now. Now it's mainly shorts to be liquidated. So I don't know, maybe there's a case that we're actually going to bounce in the shorter term, but on the weekly, I'm just curious to see how this weekly candle closes, what happens kind of in the coming weeks as we approach this higher low Fibonacci, because that's what that is. It's a higher low Fibonacci. So swing low to swing high, there's a Fibonacci, and then we can chart it again from this swing low to swing high. That was not a Fibonacci, that was a fractal, but this swing low to swing high, there's a Fibonacci right there in green. It's a 618 to 786, one of my favorites. I'll be watching this, and I'll be watching even in the next 5 days, 3 hours, how the weekly operates around the 50 week. Do we continue to fall and get separation from the 50 week, kind of similar to what happened back here in April 2025? Or are we going to see some type of, in the coming days, a bounce and we close a weekly candle above the 50 week? Just very curious of that. Want to take a glance at Solana. I mentioned this in an earlier video today, kind of getting a sense of, man, when Solana was really capitulating in these previous moves, particularly where we were getting the 20 falling below the 200, what was the time frame? So as we look at if we're going to fall into this Fibonacci, I think something like Solana, and this is just one perspective. There's so many, you can look at so many different charts and get perspectives like this. But with this 20-day getting ready to fall below the 200, when this move has happened previously since 2023, you can see how long it's taken to reach the bottom. So back here, around 3 days, 8 days, 18 days, 41 days. The average of all that is 17 and a half days. So are we like within a couple of weeks of a bottom? Is it going to be on the higher end of the time frame? Is it going to be on the lower end of the time frame? That's something I'm kind of watching for. Consider this too. Once we do bottom, I should say, if we ever bottom, because I know everybody feels like we're just going to keep going. What happens with the 50 and the 20? Because the goal then will be to flip those back, right? It doesn't matter what part of any cycle you're looking at. That's always the goal. Here's the bear market. We want to flip back above the 20. And oftentimes when you're trying to flip from a bear market to a bull market, it's a long process, right? There's rejection, falling back down, rejection, falling back down, finally starting to flip it. Boom, right? That's kind of what we're looking at here. And you can see on midterm dips, it's a quicker process. So I'll be watching that entire process right here. Interestingly enough, it's November. So again, quantitative tightening ends. Quantitative tightening ending in December, the first week of December, like right around here. Government shutdown, what's up with that? Is it going to end? What's up with altcoin ETF approvals? What's up with the Clarity Act? We have a lot going on right here that can either, with no progress, extend the dip, right? Or we could get a quick bounce, everybody. It really is in play. But I want to really underline the importance of the business cycle and the importance of what this balance sheet is saying. And so I'm just going to continue covering content on that. Let's go to ETH. I wanted to look at Ethereum. So what I wanted to talk about with Ethereum, this is a monthly chart. You can see it is, I actually have a note, Ethereum falling below the 20-month moving average. So that green line that you see on Ethereum is the 20-month moving average. Here's something to consider. This is just something I like doing. And by the way, ETH hitting 3,100. Let me zoom in a little bit on the weekly. We're gonna visit the weekly. So ETH is at the lower end of the apex of the triangle. It's going to be very interesting to see what this weekly candle does. But let's go back to the monthly. I made this note, Ethereum falling below the 20-month. So because here's what's happening. It's being tested right now. This 20-month moving average confluent with the lower end of that apex, that yellow trend line of the massive symmetrical triangle. So what if Ethereum falls below? I like to do this sometimes on all different charts. We kind of just did it on Solana. Like, what if that happens? Well, It's a big move, by the way, on a monthly chart for something like Ethereum. Well, it happened back here. And as a note, the bottom was in within a couple of months. So that's a big deal. Keep in context while I'm talking about these time frames, like back here in April, right? Keep this in the back of your mind. We're still in quantitative tightening. Quantitative tightening is coming to an end. I'm not saying we're going into quantitative easing, just in case anyone new out there. That's not like this case that I'm making right now. But the very slowing down and then the ending of quantitative tightening, that is liquidity being taken out of the system, that coming to an end is huge. But going back to the chart, that was 2 months. It fell below the 20-month moving average. Let's go to the bear market, right? Everybody's saying we're entering the bear market. This was the beginning of quantitative tightening. This was the SEC going after crypto, trying to destroy it. This was tons of different companies, Celsius, Voyager, I think, right? FTX collapsing. So beginning of QT, the crypto space absolutely just crashing in so many different ways, companies going bankrupt, and the SEC, Gary Gensler, trying to destroy the space. This is what happened. Ethereum broke the 20-month moving average. It was, like 1 to 2 months, and the bottom was in. And I'm not saying we bounced right into a bull market, but the bottom was in. When you take, I'm cruising across all of these different data points. Like, no matter how you spin it for me, like even if we go lower in a sense, like what happened back here when we broke the 20-month, like now is just not the time to sit around being bearish on crypto, because we have all of these macro events that are lined up and they have not happened yet. And you can say, oh, we were front running everything. Like everything was getting front run. And it's just not, that doesn't make any sense, because what's going to happen is that easing of liquidity being drained from the system, that's what's going to front run the belief, that is the people that are bullish. So that's Ethereum on the monthly. And then I wanted to look at the weekly because I found this pretty interesting, very interesting, as we're talking a lot about just what the Fed is doing and quantitative tightening and everything coming to an end. As a note, if you're new to this live stream, it was September 2019. Quantitative tightening came to an end. So it's right there on the chart, right back here. This cycle, finally, after years, it's right here. Quantitative tightening is going to come to an end. So what I thought was pretty interesting was if you look at this April capitulation that Ethereum had going into this move where the announcement was made for QT to come to an end, look how similar. So when I think about like Hunter Horsley over here, who's saying, man, what if we actually been in a bear market for much of this year? That's actually kind of crazy, because guess what? If you go back to the Ethereum weekly, it's almost like this looks like the bear market lows of 2018. And what did that lead to? It led to a bounce, right? So leads to a bounce. And then what did that lead to? Just a consolidation going into the announcement of the end of QT and QT ending itself. So I just thought that was so interesting. I probably should just do a full video just on this, like just a nice 10-minute Ethereum video. Because if you even we can take this fall that we had back in December 2018, and you just take the fractal across the cycle. We obviously would want to ignore something like the COVID move that's in there. But if you just overlay it here, it's crazy. The velocity, the pacing, everything can be different, but just look at that, right? But it's not just the fractal being the same that is interesting to me. The thing that's interesting to me is the confluence of quantitative tightening coming to an end right here, back then, right? And right here. So yeah, maybe we get more consolidation, but it's kind of like, what part of the cycle are we actually at? Everybody wants it to be the top of a bull market, right? Or we're going into a bear market. Everybody wants that. But what if we're in between? And I did a video on that the other day. What if we're in between? And so that's something I'm kind of considering on the macro. You go to something like ADA getting a bulk of hate and not looking much different than most altcoins for the last year and a half. And it's just crazy because altcoins have really struggled. But again, it plays right into the frustrations of these markets. What I wanted to just bring up on the Cardano weekly is right now, Cardano is testing a key Fibonacci, but it's not unlike Cardano to not see support in these areas. But it could be a very nice signal of a Cardano bottoming out area in the coming weeks, and it could be weeks. So what that looks like is if you actually go to the bear market lows, let me get another Fibonacci. If you go to the bear market lows for Cardano to this swing high that we had right here, you take a Fibonacci, we would have liked to see support in this range, this Fibonacci range right there. And there was not, right? You can see Cardano didn't hold support. And this is often so many times the case for Cardano. It's way more volatile in either direction. But in this case, to the downside, you can just see absolutely wicking far below that Fibonacci support that I just drew there. But that area, that general range at the bottom of the, like that 786 line that's right there, that was kind of the bottoming out consolidation range. It was obviously below it, above it, below it, above it, but that's where consolidation was. We could be in a similar story right now. And I think it's interesting on this current Fibonacci that Cardano is trading within. We've kind of already tested the Fibonacci multiple times and surprisingly been support, right? It's not been like, boom, falling below, falling below, falling below. Right now, it's falling below and you can just see it right now. So I will be very interested on this weekly chart in the next 5 days, 3 hours to see how Cardano actually operates. You know, are we getting a weekly close below, right, this Fibonacci line, which would be more similar to what happened back here? Or is it going to hold strong again, get some type of support? Notice this candle, June 2025, people very bearish. And it was just within days and weeks, the tune changed. That's how quick things can change in this space. And I'm not saying that's going to happen right now, but I'm very curious to see how this current weekly candle closes for Cardano. 49 cents is what we're looking at. And that's Cardano. Posted this a little bit ago. By the way, if you agree with this post, just hit one. I just like, even if you don't comment, like, let me just know you're out there. I'm covering the bigger accounts, the OGs that are just like, the time to be scared is when Bitcoin's 100K and everyone's super excited. Bitcoin's 100K and people are scared right now. The time is when it's 100. The time to be scared is when it's 100,000 and everybody's excited. It's so true. If you're agreeing with that, if you're agreeing what I'm saying in this post, that this is very likely not the beginning of a bear market, press 1. Just press 1, even if you don't comment a lot. Like, press 1 and then enter. So very likely not the beginning of a bear market, but the complete opposite. Anyone who's grinding and strategizing through this instead of throwing temper tantrums in the comments will win. Focus. Please let me just see 1-1. All right, we got some ones. We got a 2. Come on, Bill. Thanks for the ones. It's nice to know that I'm not alone. It really is. Like, you don't understand. You don't understand. People think I'm just like this, like, robot. Like, I'm a content creator, of course. But you all think I'm just out here just like, you know, going about these dips, prancing around. I'm bullish. Dude, like, I sit here. I'm running multiple businesses. I'm watching the chart capitulate. I hate it. I hate it. I walk out of the office. I go have lunch. I'm talking to wifey. Dude, I'm frustrated too. Like, I'm not just, and I think what probably annoys people is I come on here, I press record, and I don't really vent to you guys. Like, I'm not going to sit here and complain. It's such a waste. I'll like complain to my wife for 20 seconds, but her and I both, it's like, snap out of it, dude. There's zero use in complaining about anything ever. It's such a waste of time. It's like the quickest path to losing in anything that we're doing. So, like, therefore, I'm not gonna come on here, press record, and just complain and cry and just like, and also flip my stance. I have such, like, I've done so much research, and I've really put so much data behind why I'm still bullish, and I present that to you. I'm especially not going to just flip because we're were dipping, you know? Like, imagine here if I was like, oh, everybody, because it's looking bad, right? Everybody, it's over. And I wasn't. I was bullish here. I was bullish here. And I'm bullish here, everybody. And it's because of data. It's not just because I'm just like, I want to be bullish. I'm in the mood to be bullish. It really is because of data. I even did, I don't remember. Oh, I guess it's on the Bitcoin dominance chart. I have a note. I did this video back here. Altcoins less risky than Bitcoin. It was May 16th, and I marked it because I want to see how this plays out. Bitcoin dominance was like 63%. You can see it went up a little bit and then it fell big time, and now we're cruising back to the upside. But that video, the sole purpose for this video was on the macro for this cycle. And there's still a lot left of the cycle that in the long term, at the moment, altcoins less risky than Bitcoin. And I still think that. And I'm very curious to see how that plays out. I'm going to be monitoring and watching as I continue just to watch the risk models that we have. It's crazy. Bitcoin's at a 37. That's crazy. And if we look at altcoins and some of the risk scores that altcoins are hitting, I just think we're going to look back at this moment and be like, all the signs were there. Caspa, right? That's a new one we've added. It's at a 17. It's at a 17. Not as much data on something like that, on a model like that. Avalanche is at a 19. Solana is at a 25. Solana is such an interesting chart to utilize in terms of technical analysis, in terms of the ETF narrative, especially right now. ETF inflows are looking good for Solana, everybody. Even right now in recent days, they're looking good. And also for risk, it's sitting at a 25. So think about this. Solana ETFs just got unlocked at a moment when this week Solana ETFs are getting purchased. Investors are interested. It wasn't a flop. And we have a risk score at 25. Historically, at this risk level of 25, the price was higher 62% of the time after 3 months and 100% of the time after 1 year. That's not a guarantee that, man, 100% of the time after 1 year, it's definitely going to be higher in a year from now. But that is sound, unemotional data. And our data in our risk models is so much that's going on here. Our advanced risk algorithm, emerging asset theory. I like to mention this for anybody that's new that's watching this stuff. But it's statistical modeling of market cycles. And I don't pretend to be the one that did all this. Axel and Alessandro, our devs, they're just awesome at what they do. Game theory integration and price volatility and volume. So these aren't just like nice charts, colored charts. There's actual data that is representing the risk. It's not predictive. But when our risk models are looking like this, while people are calling for a bear market, and while altcoin ETFs are just getting ready to be unlocked, and while quantitative tightening is about to come to an end, and while the Clarity Act is about to be passed, I'm sorry, I'm not going to sit here and do a YouTube video being bearish. I'm just not. I'll do a YouTube video while we're crashing, and I'll do a YouTube video while something like Cardano, which I've been very vocally bullish on over the years, has not done a 10, 20x, and I will still be bullish. So those are my thoughts. How's everybody doing anyway? I'm just looking at some comments. Dog is the play. People think I'm crazy for that too. And it's okay. I genuinely, I don't mind that people think I'm crazy. Like for being bullish in general in the macro and crypto. I don't care if people think I'm crazy for just, I bought more dog. What was it? Was that yesterday or today? I keep buying dog. It's the #1 meme coin on Bitcoin, which actually, by the way, has held up very nicely. Dog has actually held up very nicely during this dip, down like 1%. Man, I saw a comment about ICP. ICP was making moves. Looks like there's some rejection at the 50-week moving average. I was going to keep this live stream like 20 minutes. I don't even care anymore. I'm just going to sit here and talk. Let's go. Appreciate you. Appreciate you guys in the comments. I really do. This is what's kind of crazy. Man, I meant to change my angle. I've got separate angles. I got a nice little bookshelf back there. I meant to change my angles a little bit here. Yeah. So Dan, I've honestly never seen this level of pessimism, and I've never seen it either. It's crazy. It really is crazy. I still see ones coming in. Let's just look at this a little bit. I think we have H bar risk model. I mean, our platform has, I think, like one of the most risk models, like proprietary custom risk models in the crypto space. And by the way, everybody, if you're interested, we have a free trial going on right now. If you want to mess around with this, you can start planning exits, setting levels. We just implemented text. I need to still send that email out today to everybody. But literally be alerted when we're hitting sell areas, buy areas, whatever you want to do back here. But here's H bar sitting at a 49. 49. It's interesting too, because all these risk models, it's very valuable to study. It's actually even valuable to study risk models that you don't even own the asset. Like if you own H bar, you might want to go study Solana. If you own Solana, you might want to study H bar because they all look different and you can get valuable insights. But interesting about H bar is, how's H bar doing anyway on the charts? You can see 49 sounds high, but the price was higher 61% of the time after 3 months, 90% of the time after 1 year. And you even go to 2021 in January. Look at that. That was like the beginning of the altcoin move. H bar was sitting at a 50. And so you can see what it went on to do in that environment from that level. So we're sitting in a very similar area right now. It's a 49. I want to see if I have an H bar chart. H bar holding strong, right? What's the daily look like? This is the weekly. H bar holding strong, testing this area back here that we had on the mass liquidation day. I wish I had this post from X up that, shortly after I think the liquidation happened, this event back here, the post was basically explaining, you know what, this probably hurt so bad that we're going to see continued kind of like struggle in the markets for the short-term foreseeable future. And this is like exactly what's happening. We had like this little relief rally out of it, and then all the longs are being liquidated again. I don't know why there's so many people that are doing this leverage trading. I really don't. Is there somebody spamming? I don't have any mods in here. I don't do enough live streams to even have mods. Oh, wow, yeah. Let me see. Ban. I can ban. Sorry about that, guys. Really sorry about that. So, so that was H bar. I saw somebody in the comments talking about H bar. What else are we looking at? I know we saw, we saw an ICP chart, but we don't have an ICP risk model. This is like, so Daniel, it's such a good, like, something like this is obviously never 100% win rate, but genuinely, as we've been watching these cycles, you go to total crypto market cap, like even from the bear market lows, every time we're dipping, every time. And I'm going back here to 2023, 2022, right here. Every time we're dipping, this comment from Daniels is just so, it is what it is. It's been 100% win rate like since 2022. When people are the most emotional on one side of the market, the opposite is going to happen. Upside from here. And I mainly agree with that. I wouldn't say that we might not trickle down a little bit more, but on the macro, everybody, like there's so much happening right now fundamentally that nobody's even paying attention to. The emotion is so high right now, it's crazy. Crypto market cap excluding stables. Dude, I have so many of these open. Crypto market cap excluding Bitcoin. There's excluding Bitcoin. Here's excluding Bitcoin and ETH. I mean, this is excluding Bitcoin and stablecoins. I don't know if I have one with everything excluding stablecoins. I should probably get one. The pessimism has been more bullish than ever. I oddly know exactly what I think what you're saying. Yeah, actually, this is a good one. Sweet. Let me bring up a chart. Ooh, man. I apologize to all SWE holders because I allocated to my iTrust Capital account. And at that moment, we were down from that moment. Like so long ago too. It was like a while ago. But dude, it's a very bullish crypto. This is a VC coin. But we look at this sitting at a 29. So that's the other thing. So this is also where like emerging asset theory and statistical modeling of market cycles helps build something like this, this risk model for SWE. Can somebody tell me how to say it? Everybody I see online seems to say it differently. I think SWE makes most sense. But anyway, sitting at a 29, price was higher 79% of the time after 3 months, 100% of the time after a year. And what's really cool is you go to 29. I mean, this is a really good example of kind of the risk models itself. You can see on at least the data we have on this chart, if you go to a 29 back here, May 2023, if you can see, it wasn't the bottom, right? But we went on to bottom at a 13. You go to this next dip and we were at a 29. There's a 30 right around July. We went on to bottom in August at a 23. So we could see a move like this, right? We're trickling lower, like SWE's getting closer to sub 20. This is why it's funny. Like we have our exit planner to, prepare for really bull moves where we're getting into the 60s, 70s, 80s, 90s, or 100 to start selling. When in fact, we're on something like this model, the exit planner would be probably quite useful soon, right? And you don't need an exit planner to look at this chart and be like, man, when it gets to 20 or sub 20, I'm scooping up SWE. But this is what this chart is looking like. It's very interesting that to look at a chart that doesn't have like cycles, right? It's not as easy to read, but that's why it's useful to go look at, especially with something like SWE, go look at a Solana chart, go look at an Ethereum risk model. You start gathering context of how market cycles operate in terms of risks, and then you can kind of set your risk scores based off of that. But if you look at it from a different perspective, if you go into the exit planner, you can go to like even something like Bitcoin, and you can open up our risk mode, and you're able to basically, so this will be useful to do for something like SWE. And if I go down to it, let me just bring it up. What you can do is set your exits based off of these risk scores, and the risk score will show you, man, when was the last time it was here? And you can see this top line, sell 50% at 80. It was never at 80, right? Sell the second line, sell 25% at 70. You can see in green, this green graph, SWE was never at 70. So this next one, sell 10% at 60. I think even just evaluating this chart, you can see how SWE kind of keeps topping around 60 risk. It's a good first sell if somebody wants to start taking profit when we start bouncing to the upside. So you can set an alert based on all of those risk levels, and then you can save those notifications for email and SMS. But that's SWE. Somebody said we're bouncing back. Why do I not think that's entirely the case? Ethereum up $100. I'm just kidding. I see $100. I see $100 bounce on Ethereum, and I get bullish too. Same thing with like, any of these charts. We go to ADA. It was just at 50 cents. I see it at 51 cents, and I'm just like, we are so back. So I feel like this cycle is the only time we're going to experience this craziness in a long time, because they want to make it into law. Only reason of manipulation for cheaper prices. We should all learn from it. I think there's a lot to be said in the whole thesis of manipulation before Clarity Act, because remember, the Clarity Act is going to end a ton of how these exchanges and market makers operate and what they're able to do. And it really is. It's like a buddy even said it earlier. It's like they're just getting it in. My prediction is soon Donald Trump will talk about the recent downtrend of crypto, and then he'll announce something crypto related, and the market will go ballistic. And he'll say, "I'm the crypto president. I revived it." I wouldn't mind. What else, everybody? Any others you want me to take a look at? The Winnie the Pooh Jack in the Box. I'm sorry. I don't know if I posted a video on X. So Denny says it's all my fault for the Winnie the Pooh Jack in the Box. I use a Winnie the Pooh Jack in the Box to illustrate how quick a bull market can arrive. And the irony was that it was actually a bear. Sorry, everybody. Man, Chainlink is such a good coin that I have no exposure to. Here's what's actually kind of cool. Like, if you are somebody out there and you are kind of like, you're like, man, I'm here. It is what it is. If it's going to go to zero, it's going to go to zero, but I'm here. I'm in the crypto space. There is a positive to this, besides a reset of sentiment and everything, and even a reset of technicals. A positive is moments like this create a good time to like reevaluate your portfolio and reallocate stuff if you want. I'm not saying that's what I'm doing with Chainlink, but like for somebody that's like me, and I'm just kind of like, back here, oh man, it's bull market about to really kick off. We're about to go crazy. I've got no exposure to Chainlink, and then we're dipping. It's a good time to reallocate, right? So if you own like Algo, right, and you're down on Algo, and this isn't financial advice, but you're like, I'm more bullish on Chainlink now, right? You sell your Algo, you just locked in like tax loss harvesting, right? Because you're down, you sold, and then you buy Chainlink and you reallocate in this moment. There's a benefit to doing that. Like when I say strategize, these are the types of things I mean. Like now is the time to strategize. I'm not saying go do that, but I'm just saying it's definitely an interesting thing. So Chainlink though, Chainlink is like at the center of everything crypto. It's crazy, right? And Chainlink has not had its bull market yet. So I oftentimes hear about Cardano, it's vaporware, it's doing nothing. Look at the chart. Well, everybody, majority of the altcoins are like that. Chainlink chart looks like almost identical to Cardano's chart. And Chainlink is at the center of the crypto ecosystem and is incredibly bullish, by the way. But this is what the chart looks like, revisiting just above the 200-week moving average, hopping around this kind of structured area we were tracking. I guess I had this, I don't even know when I charted this, but you can see it's still in this range. Higher high, higher low range. I can share risk models right now, everybody. Like when we're getting into actionable areas, I probably won't share our risk models very much in video. But right now, I feel like I still can. And like right now, Chainlink is at a 26. And man, just look at this. It's the same story this entire cycle. Chainlink making a move to 50, rejected, back down into the 30s. I think even some 20s in there. Is there any 20s? Yeah, I saw one. Like, let me zoom in. Yeah, 29. Look at that. Consolidation, bottoming it out area, 30, 20, high 20. And then boom, 50s again. And then consolidation, back down, 28. Here's 29. And then boom, we're taking off again. Rejection at 50 risk score. And now here we are, we're sitting at 26. We're back into it, everybody. Notice the bottoming outs on Chainlink on this risk model though, like hovering in the 30s. And obviously this is an illustration of price too. It's just sideways. It's choppy. People are on edge waiting for the next big dip, like the beginning of the bear market. But you zoom out and it's kind of like, man, we really are like, we're not, if we're going to illustrate a risk model for Chainlink in any way, we're not going to illustrate it. At least I'm not going to. You can use the risk models however you want. You can use the charts however you want. But I'm not going to illustrate this moment like, hey, this is just what the top of a bull market looks like, because this is nothing. This looks nothing like the top of a bull market. Here's what a Chainlink bull market looks like, and here's what the top of a Chainlink bull market looks like. And then you can mix in the fundamental data, the macroeconomic data. Dan, look at last year's ADA chart at this time. Look at last year's ADA chart at this time. ADA chart. Like the same date. So are you talking about the daily? Let's see. So you're talking about November 3rd. I mean, I should have just in my mind known November 4th. November 4th, 2024. Yeah. Election day last year. Oh, I don't think that's the move that's going to be starting right now, but we're in a new season. Things will be different. A move like that, I think, will come for crypto. It's definitely not going to be, I don't think, this week, but that is crazy. You know what's funny is I just posted about this on X. I remember being like out on a Saturday right around here, and all of a sudden we're pumping, right? Like, and I remember, I think, breaking 50 cents, because we're sideways in the 30s for like months. And all of a sudden I'm out on a Saturday night with the fam. We're breaking 50 cents. Man, it was so fun. And it's funny to sit here. I was so excited about 50 cents then. And the same is true for so many of these charts. I don't know. Let's see what was Chainlink doing in November. Look, so the exact point I'm trying to make right now, all these altcoins are so similar. So Chainlink at this time a year ago, this is a great point to bring this up. $14. People hype, dude, right? It was just at $9, $10. Now we're 14 breaking up. Well, now we're at $14 and the bear market's starting. Everybody's bearish. It's interesting how quick things can change. And I can tie that concept that we just looked at on ADA, looked at on Chainlink, and I bring up what Leo says. Bitcoin's $100,000 and people are scared. The time to be scared is when Bitcoin is 100,000, everyone's super excited. And that's exactly the case on these charts, everybody. Like, we see how sentiment can be so different within 1 year at the same exact price. It's so interesting. It really is. Dash. I don't know if I have a Dash chart up. I saw a post, somebody commented on a post I made in 2021. I think I put that it was like 700% from all-time highs. I'm buying is what I said. What a good buy. I should have held, because Dash is going crazy right now. I know. I don't have a Dash chart up right now. What else? A dog chart. The only people that like dog are the people that hold it, including myself. Otherwise, most people hate dog, but this is the number one coin on Bitcoin besides Bitcoin itself, BTC itself. And of course, this is one of my top holds, everybody. I'll keep saying it. I don't mind. I don't mind that people think I'm crazy. It's okay. But I have dog. I'm going to bring up the risk model sitting at a 15. So the dog risk model in April was at an 8. That was the bottom. And then in this dip, it was a 20. In this dip, it was a 23. And right here, we got a 23. So the lower the risk score goes, and I just bought dog yesterday. I think it was yesterday. The lower the risk goes on dog, the more incentive I just have of buying this thing. Like, because I think there's going to be a bull market. I think meme coins are going to do well. I do. And if this is the case, and we get liquidity flooding into crypto, the number one coin on Bitcoin, which is dog, it is going to do very well, in my opinion. And keep in mind, it's like $140 million market cap right now. The upside, the risk reward for this coin, then don't go buy it. Don't go buy it. Everybody says I shill my coins. Don't go buy it. Okay? But this is me tracking my crypto journey. The upside on this play, if we get the bull market, and I've been saying this for like a year and a half for this chart, I realize that. People think I'm just crazy. But the upside is if we get the bull market is so good here. I mean, a 10x is 1.4 billion. Dogecoin is it hit $100 billion market cap at one point or something. The upside on this coin is ridiculous. Dan, you're being disingenuous. We are not expecting 1,000% gains or 1,000x gains. You have been saying for over 4 years how we will inevitably go to the upside, how we will have a blow off top. You are wrong. When did I say we'll have a blow off top? Number one. And we have been going to the upside. Practically the entire industry did not get a parabolic move this cycle so far. Okay. So yeah, we didn't get a parabolic move, but that's why I say that. If there's any reason on the total crypto market cap chart to be frustrated, it's just that we didn't get 1,000x gains, 20x gains, but we've seen higher highs and higher lows. So coming out of the bear market when I was doing content, how have I been wrong and how am I being disingenuous? It doesn't make sense, because the only thing that is kind of bad about this scenario, because that's what's happening. This scenario is bad, right? I'll go to Cardano. This scenario right here is bad for people. And the only thing that's bad about it is that there has not been like 1,000x gains or 10x gains. That's how I see it. But sprinkle in there, people had opportunity, right? If you were accumulating at bear market lows and ADA went up like 400 to 500% right here, like there's been opportunities. I'm not trying to be disingenuous, but when I receive like crazy nasty comments, like people are blaming me for just this, like for what? Like just because of what? Because there wasn't 1,000x gain, like a 10x gain or something. That's the only thing I can think of that people would be mad, in particular mad at me, like it's my fault. When in general, one thing I will say is, and this is recent for me, is I've really started to study what's going on with the business cycle, what the Fed is doing, and how it really, this lagging extended cycle of QT that we've been in has really kind of diminished like the the clockwork 1000x that people are used to every cycle. And I genuinely think, I'm not trying to be disingenuous, I genuinely think people are upset that they didn't get a certain amount of gains that they wanted. And I can actually say that pretty confidently, that I think that's what the case is, because I think all of us are like that. Like if I look at an ADA chart, you think I'm sitting here happy? Like, you know, bear market lows were 23 cents and we're sitting at 52. I don't sit here and I say, everybody, that's such a great thing. But what I do say is, in the midst of quantitative tightening and years of it, the fact that Cardano has done this, and now we're on the precipice after all of these years of the Clarity Act and QT finally coming to an end, I can sit here and remain bullish on ADA, and I can remain bullish on altcoins. So again, I don't mean to be disingenuous at all. But when I'm being called like names and stuff, I just think people are calling me names for being bullish through this because they just didn't get a certain return that they were like thinking. But I never sat here and said like, everybody, bear market bottoms in, you know, we're going straight to $5. People are just tired and disappointed. I understand. I genuinely do. I was explaining earlier in the live stream. I really do. Like I'll get off this live stream. I can hear the dishes out there. I'll go eat dinner with the family. And I'll just like sit down and let out a nice sigh to wifey, because I do understand. Like, I really do. Dan, just want to say you're one of the very few YouTubers I trust and respect. We are the ones that watch you and support, but rarely comment, while the bots and quick 10x people hate. You the man. God bless. God bless you, man. I really appreciate that. I do. And you know what? Like, that comment really does mean a lot. And I don't ask, it's very encouraging to get to see these comments, but it really does also keep me going to know that I know there's a ton of you guys out there that you're just in my boat. Like we're in very similar situations. I'm just recording it. And I appreciate all you guys. Benjamin Cohen thinks the top is likely in for Bitcoin, or really close to it, and where there won't be the bull run we think there will be. Why do you think he disagrees? I don't know. I don't watch a ton of Benjamin's content, but I highly respect him. I don't know. I mean, I don't know why he thinks. But when I dissect the fundamentals of the cycle, including things like monetary policy and this Fed balance sheet, here's the top of the bull market, for instance, in 2018 on the Fed balance sheet. What was getting ready to happen was this quantitative tightening. And then last cycle, here's the top of the bull market of the last cycle. What was getting ready to happen? Massive quantitative tightening. So just on this chart alone, we're at the flip side of that, right? And even if I'm not saying we have to go into this crazy quantitative easing, but this post-quantitative tightening normalization phase is something I'm highly interested in. And I think that risk on assets like crypto, especially with the Clarity Act being passed and institutional adoption coming into altcoin ETFs whenever the shutdown ends, I'm very interested in that thesis, that it's not the beginning of a bear market. And that's just my opinion. And I'm sure Benjamin has his own opinion. I don't know what it's exactly rooted on, but I respect it, man. So Benjamin pointed out, so agreed. And I've been nonstop talking about this as well. Ben pointed out that the last time QT ended, the market dipped. 100% I know. And I think it's notable, and we should focus on that right now as we're dipping. Where's my chart? Because it's probably one of the most important pieces of data to pay attention to right now. If I could find the chart, it doesn't really matter what chart I bring up. We can go to this one. So last time quantitative tightening ended was years ago, 2019. So September 2019 right there. 100% agree with what he's saying, that the market dipped. But 100%, this was not the beginning of a bear market, right? I don't want to say it was the beginning of a bull parabolic move, right? That took like a year, a little over a year. By the way, that fractal is last cycle gold topping out, which is potentially happening right now. So it's interesting to put that here, right? If gold starts consolidating, what will this chart do? This is everything excluding Bitcoin, by the way. But back to the point, like, this is where I'm so interested in this right now. But to your point, the market did dip. But even with that being said, even if we're going to continue dipping, right, on this chart, I just don't think it's the right time to be macro bearish. And that's just my opinion. And maybe I'm wrong. Like, maybe this happens, right? Let's just take the last bull market high into this bear market, right? Maybe this happens. I don't know. Maybe it's incredibly volatile and terrible. But even if it does happen, I'm here for it. I think the crypto space is so early, and everything that's happening with institutional adoption and clarity and everything, that will be so insanely undervalued if we fell to $500 billion market cap. This is excluding Bitcoin, by the way, for altcoins, a $500 billion market cap. Think about that. Ethereum with like nothing going on last cycle broke, I think, $500 billion. And with Clarity Act about to pass, institutional adoption, quantitative tightening coming to an end, I just have trouble seeing that happening. Like, we could get crazy capitulation to try and form some type of bottom, but do you know how much capital is about to be unlocked with Clarity and with the altcoin ETFs? So that's where my thoughts are rooted in. So I agree with Ben that there was a dip the last time quantitative tightening ended, and I don't know. I haven't seen his comment to like know enough about his context, but I like Ben. I think he's a trailblazer, man, and I think he's very smart. We've got it. It's the end of the cycle. I am beyond delusional. It's okay. I don't even mind. But that's a good piece of data because I was delusional here. I was delusional here. I was delusional here and here. And even if we fall lower, like, I'll be delusional here on a live stream. And I don't mind if people want to come here and tell me that. These are the bullish comments I signed up for. This is why I came on here. Bro, the biggest FOMO event in history is coming soon. Dude, what a good clickbait title. Can I use that? Can I really use that in a video? So I'm not a 4-year cycle person. I think there was a massive coincidence in terms of Bitcoin halvings, the 4-year cycle theory, and this chart, the Fed balance sheet. I think it was a very big coincidence. And I think the extended quantitative tightening phase that we just went in, I think it might very certainly throw off 4-year cycle theory. And what's exciting is, like, that's my opinion. I don't know. And like, but I'm obviously basing a lot of my approach to this market on that thesis. But what's cool is like, we're going to find out, right? We'll just find out. Even with this extended cycle and all this similar data, right? We just looked at quantitative tightening in July of 2019, right back here, came to an end. That wasn't the beginning of a bear market. Similar to, I don't think this is the beginning of a bear market, and I got to move that QE over because I'm not saying we're going into QE right now. But even with that, if 4-year cycle theory remains strong and we actually do fall into a bear market, right? Like Bitcoin's in the 30s. That's crazy. That means that 4-year cycle theory was correct. And I'll have to do a video, obviously, at that point and be like, you know what, man, like literally. I mean, if that happens, I'll literally do a video and it will just be, I was wrong. I don't know what else to do. I always manage my risk like it could all go to zero. I don't want that to happen at all. But I manage my risk that way. And if this happened, like, you know, I think I'm fairly comfortable, but at the same time, I'm not quite sure if that's going to be what happens. Wow. So this was what, like almost an hour, 20 minutes. So basically an hour longer than I thought that I really, really kind of wanted to go, but it's all good, everybody. Anyway, so much data to squeeze into a video and try and organize. I'm sorry if it was all over the place, but I'm obviously bullish on the crypto space. I think there's so much good stuff in store. On the short term, we went over a lot of the technicals, kind of what to look for in terms of maybe more downside and consolidation. So be very ready for continued volatility, but let's see what happens. Just think about this. When's the shutdown going to end? That's a very big deal right now for markets. Even just the uncertainty, like markets hate uncertainty. This shutdown is crazy. It's not good. When's that going to end? When that ends, that will light a fuse naturally. That's not clickbait. That'll light a fuse for altcoin ETF approvals. And we have a fast track for the Clarity Act, which is going to unlock so much capital to flow into the crypto space once that is passed. It's also going to put into check and hold accountable the market makers, the exchanges, these longs that keep getting liquidated at one after, like over and over and over. We start breaking out and then boom, rejected. Why do you think that keeps happening? All of the leverage longs keep getting wiped out. That's not going to happen so easily. And then obviously quantitative tightening, which is a little bit longer of a thing, as we were just talking about. When it came to an end September 2019, it was announced in July, it came to an end in September. There was still volatility, everybody. But check that out. September, December, it looked like it wanted to start bouncing into its bull market. And then what hit us? Boom. January, February, March, the COVID stuff. Hopefully that doesn't happen again. But we could really be in this moment right here. Quantitative tightening coming to an end, an easing of, not quantitative easing, but that restriction of liquidity coming to an end. That's a huge deal. If we're in this moment right now, even with more downside, at the precipice of deregulation and institutional adoption, I want to be here for that. That's just kind of how it is. So appreciate you watching. If you're not a subscriber, please subscribe. If you enjoyed the content, please hit the like. If you're not in our intelligence system with our risk models, if you want to prepare, for so long, I'm just like, set your exits, get back there, know when to sell. But we are absolutely closer to accumulation territories. But if you want to kind of view our assets that we have back here, you can view on our website what assets we have. We have a lot in terms of being a risk model platform. You can click the link below in the description. We have a free trial going on right now, and you can try it out for yourself. We really do try to put our money where our mouth is right now and just go try it. If you don't like it, cancel. before your trial is over. So get back there, try us out, start planning either way for accumulation or exits. And even in our dashboard, we have Axel's wrapping up a news. Like right now, you can add widgets. You can build your own dashboard back here. But we'll have news back here based on assets soon. So that's pretty cool if you're a member. And so appreciate you cruising through. Hang in there, everybody. Really, hang in there. Keep it cool. And I'll see you all in the next video. God bless.